2013. In recent videos, I've been talking about the relative strength in the NDX and saying, is it going to pull the NASDAQ, is it going to pull the S&P up and the Dow with it? And we can see that this week it actually did that. I was leaning a little bit more towards the bullish camp, and that seemed to be the correct stance because you can see here clearly there was a gap earlier in the week here on Tuesday right here, and we've basically held up since then. I'm going to show you the profile in a bit and give you a better idea of how value is being accepted up at these levels. But even just looking at the price chart, it should be obvious to you that we haven't backed off yet at all. I just want to go through these majors and look at them actually on the weeklies. In that on the weekly charts, it's almost like a seller's shut-off pattern where you have a number of down bars taken by one big up bar. So you notice that these 4 weeks of declines here were actually taken out by 1 week. The only point I'm trying to make of this is this usually leads to higher prices. It would be very, very rare, is what I'm saying, that the entire bullish bar, once this pattern is presented, gets reversed the next week. Usually what will happen is you'll have some sort of a retracement into some small percentage, maybe up to half of the bar, and then you go higher, if not just going higher right away. All right. Profile-wise, as I was saying a second ago, we are definitely looking pretty bullish, I would say, in that the gap that we see here between September 9th and September 10th never filled at all. And there was a number of things that happened this week that really kind of drove the point home that it's bullish, and I'll go over a couple of those with you here. You can see obviously that once the gap happened, we had kind of a squat profile, and after that, on Wednesday, Thursday, Friday, value was overlapping to higher, overlapping between Wednesday and Tuesday, and here value was the same. It just remained high. The distribution from September 11th here was divided into two parts, and we always like to say that you should treat these 2 days, these two distributions here, as if they were two separate days. And then note, as time goes on and price continues to trade in subsequent days, is there any acceptance of price into the lower distribution, which would be here? This distribution and this distribution are separated by these single prints. And you can clearly see here that even though we did have some foray down in here, notice that no real value was built. It kind of tapered to the bottom, and the value area remained squarely in the upper distribution. Then Friday, same thing. Value was actually overlapping to up even, and once again, you sold off on a little bit of liquidation, tried to get inside of the lower distribution, and you couldn't even do that. So essentially the point I'm trying to drive home is this market is really holding up really, really well. And this is an interesting tool that I use very often. When I look at how the market is reacting as it's coming down, I'll look at the contract values here. I'll look at the amount of volume that is traded at each particular level, and that will give me a better indication as to whether or not the move is going to, bounce at the prior day's low like it did here, or maybe go down through, say, sell off lower. And you can clearly see here Friday, as the bulls remained in control, it's very apparent. You can see here, look, that the average number of contracts here is much higher. You can see here at the point of control, this is where the most amount of volume traded. You have 60,373, and there's 58 just above it, and 35 and 39, 36. But look what's happening at the lows as the bears are pressing price lower. Who's really trading down there? I mean, are there any big players trading down there? I don't think so. If they did, their actions would show here. You can see at the bottom on the low tick, only 132 contracts went off. But I'm actually more intrigued by these numbers here, seeing how 4 ticks above the low, you had 4,000 contracts go off, and then 3 ticks off the low, only 1,700. 2 ticks off the low, the contract volume dropped to 1,585, and then finally on the low of the day, very few went off. So this sort of tapering of the volume as you go down is clearly a sign that there weren't any strong sellers there, and I just carry that information forward into the bigger picture, and that the market is holding up quite well, and it is for now at least holding up pretty bullish. All right. So going into next week, I'm focusing on the fact that we have these patterns here, and I'm going to go back to the daily, in that they look like basically a nice cup and handle forming, and it looks like it wants to lift higher. Obviously, S&P has clearance to about 1710, which is the prior cash high here. As we discussed last week, the NDX broke out this week to a new multi-year high, but didn't really go anywhere after that, which is interesting. But a lot of that could be attributed to weakness in Apple, which was very weak this week, and the Nasdaq Composite also broke out, but also didn't go anywhere. But again, it's probably a lot of that is due to Apple, which has a heavy weight, at least in the NDX, and it wasn't able to power forward. We have Fed coming up during the course of the week, and I want to draw everybody's attention to that. My comments here are all quite bullish because all I have to go on is past price action. The thing in the future on the horizon, which could throw a wrench in all this and cause correction, would be Wednesday's action, correct, which is the FOMC meeting. And the reason I mention this specifically, even though these happen every 6 weeks, this one is a little bit more important than most because this is the September meeting where they are supposed to announce whether or not there will be what they call the taper of the bond buying program, if they're going to ratchet it down a little bit from the $85 billion a month that they're doing now. Rumors have it that it's going to be approximately a $10 billion a month decrease, would take it to 75. The question is, does that impact asset prices, which a lot of people think are somewhat artificially inflated due to all of this Fed action? So we shall see. A lot of people are also saying that it could be a non-event. So I'm just pointing your attention to what's going on in the middle of the week, that we do have the meeting announcement and the forecast, and then the new thing, which is the chairman press conference, is going to kick off at 2:30. All right. So that's all I have for this week. It's a little bit short and sweet, actually, going into the Fed week. I'm actually not too heavy in a lot of things, actually, in terms of new positions. Next week's video will be a lot more comprehensive. I'm going to have a lot more trade ideas once the Fed is out of the way. Individual stocks, futures, things like that. I'm still looking at corn, bonds, wheat, and coffee. None of those is set up yet, but definitely follow me on Twitter for the updates on all of that. The Twitter handle is right at the beginning and end of this video. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.